Sticking with our retail discussion, investors are also watching names like Target, BJ's, TJ Maxx, and Ralph Lauren ahead of their quarterly results this week. And our next guest says the athletic retail is the place to invest. Here to weigh in, we've got Tony Zipparro, who is the EquitySet Chief Executive Officer. Tony, great to have you here in studio with us.
Thank you for having me.
Absolutely. All right, so let's dive into this. Walk us into your thesis here on the athletic apparel side of retail.
Yeah, so athleisure definitely had its heyday the last couple of years. Obviously, with COVID and staying indoors and remote work, you had huge run-ups, right, in stock prices and discretionary spending. The thesis now is they've actually, over the last year and year to date, massively underperformed not only the market, but the consumer discretionary and retail other names and ETFs.
So banking on a bounce back here.
Correct, and banking on a couple names that we feel diversify in terms of product line, price points, and really they're the stalwarts in the industry that, even though they're not perfect, they have been around and they're generating massive profits and cash hoards.
What's your assessment right now of the ability to generate demand through innovation through some of these companies?
Yeah, and we were talking a little bit earlier about it feels a little stale, right? So when you're looking at the big players, Nikes, Lululemons, Under Armours, while Under Armour might be kind of the newest one with some of its celebrity collaborations, right? Obviously Nike's been doing it for decades and doing it well. It just seems like the same product with a different face on it, right? And same thing with Lululemon, yoga pants, right? Some nice breathable polos for golf and going out to the bar after. But it really has to improve in order to kind of drive sales and demand. But that's where we think if there's a waning of consumer spending, at least those are safer bets than some of the newcomers in the space.
It's not the bar if you just call it the 19th hole. At the end of the day, we also have a critical year for all of them, and there's going to be a lot of competition amid the Olympics. It's an Olympic year. Of course, you've got the tentpole events, and we were speaking with a couple analysts about this earlier on today, and how critical, and actually the CFO of Amer Sports, we had them on Morning Brief earlier today, just talking about how critical of the year this is with the Olympics, with a lot of major events that are taking place, and companies needing to get this right. What happens if they do not, and what's the difference between the winners and losers there?
Honestly, I think they'll be fine. And that's strictly from a valuation perspective. A lot of what we're seeing with names like Nike, Under Armour, Lululemon is it's really already priced in, right? So if they don't do well, you've seen them fall 20, 30%. Whereas, yes, there is a chance that they're losing market share, but a lot of that market share is growing, right? There's reports out that right now around $330 billion in athleisure consumer spending. That is supposed to be at a 9.3% compound annual growth rate until 2030, which puts the market nearly double. And so while optics news might not provide the best headlines for the shorter term trades on those names, really, I don't think in the long term it matters that much to the bottom line for them.
We just had a company in Under Armour put out their fourth quarter and full year results here for fiscal 2024 just last week. Thinking through the management at this company and the revolving door that has been, what should investors be keeping tabs on there and what this management team needs to do?
Yeah, and make no excuses for it, Under Armour's results were terrible, right? Dismal. You saw it pushing down heavy and then surprisingly had a lot of buying and it kind of pushed it up and it's right around those same levels. And that's really, it's a value stock because of all those issues right now, right? You're looking at half times price to sales.
Does mismanagement classify a company, though, as a value stock regardless of the environment?
Good point. And so I think with former CEOs, a lot of it is, it's going to have to be a turnaround story. So I think that's where if they can get it right with management coming in, shaking things up and pushing the company in the right direction, that's the play that then it becomes a value stock. Right now, it's a little bit of a gamble, right? In terms of its valuations are low, but they're low for a reason because there's a lot of questions around whether they can sustain.
There's a lot of course, litigation that is always taking place with these companies, whether it's Nike and New Balance or whether it's Adidas and Lululemon. I mean, it seems like there's always something that gets kind of lobbed at the other enemy territory time and time again here. But is there anyone that's clearly running away with the consumer mindset at this juncture?
I would say Lululemon may be the closest, right? Nike's had a lot of bad press, and issues come up with supply chains, international markets shrinking. They've been around for a while, right? Kind of that bodes well for where they're in their business cycle. Under Armour, we know of their issues. Lululemon's the one that they haven't really made any major moves, and so I think that's where they have the cash. They're having the growth in order to reinvest in something big, and that's where I think they're going to be focused on the right things the most out of the other two.
All right, Tony Zipparro, who is the EquitySet CEO, joining us here on set all the way from Chicago. Thanks so much for taking the time.
Thanks for having me.
Absolutely.